Hey, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and welcome to another morning of just utter and absolute insanity in these markets. What we're going to go over this morning are the news headlines that I think are of some value, and we'll take a look at the pre-market futures, and then we'll leave off with some of the symbols that we want to discuss this morning. In particular, Apple and Microsoft and Amazon, because those are the three largest components of the triple Qs, of which we are looking to short. We are already short. We have a small position to the short side, but we're looking to lean into the short of the triple Qs, because what we're seeing here in these markets is a tug of war between the Federal Reserve injecting liquidity into the markets and forcing stocks up higher. And then you have, on the other hand, the dramatic impact of the supply chain that's out there, and nobody's paying attention to it. It's absolutely bizarre. The analogy that I'll draw is that in 1906, you had the San Francisco earthquake, and San Francisco was destroyed. And the stock market shrugged it off for several days, and ultimately it broke a few days later. I am in utter shock that stocks such as Apple, not so much Microsoft, but Apple and Amazon can continue higher absent some sort of manipulation. And I'm not saying that the government's going in there directly buying the shares. I'm just saying that you have hedge funds that are borrowing from the Fed. They're going in and they're buying stocks hand over fist. So let's get to the pre-market activities. And actually, you know what? Let's go over the headlines first. I'm going to share this article. It was shared with me by one of our fellow members, Chris. And I read it last night. And it puts into text a lot of what I say. And I like the article, so I thought I'd share it with you. But in terms of the headlines that are out there, you know, we could argue about how widespread the coronavirus is. Is it overhyped? You know, I'm not that smart. I keep saying that, and nobody's going to argue the point. Masked President Xi warns prepare for a long, grim fight. Virus battle as Trump insists outbreak will end by April. So you have the president of China, who is actually setting the stage for what appears to be the worst case scenario, or a bad scenario, where you have our president that's out there saying, oh, all is well, all is well. Whose interest is it to try to play this down the most? I think it would be Xi, but he seems to be a little bit more upset than what is the president. And the president certainly wants the stock market to go up, given the fact that it's election season. Remember, the stock market is the economy. The average Joe doesn't care about PMI, CPI, PPI. All they care about is, what is my 401k doing today? And President Trump gets it. He certainly gets it. Moving on. Here we're talking more about the supply chain. Massive auto inventory begins to stockpile as coronavirus zaps an already anemic Chinese car market. You can see they've been in a downtrend. Look at the streets. Ghost town. More to the supply chain. China's smartphone sales and production to crater amid supply chain shock. Now let's quantify. I don't want to be an alarmist out there, all right? This is a headline that's certainly driven to get clicks. Let's talk directly about Apple. Trendforce Corp, whoever they are, said Apple could see a decline of 10% in iPhone sales in Q1 from 45.5 million to 41 million units. Apple's on the verge after closing up yesterday with an outside reversal bar of breaking out to new all-time highs as early as today. But nobody's paying attention to this. You got a guy like me, 5 a.m. in the morning. I just threw water in my hair. I'm in front of my microphone talking about zero hedge. I'm the only one that's out there talking about the supply chain shock. This is crazy. A new report, according to Reuters, details China's smartphone sales could plunge upwards of 50% in Q1 as retail phone stores, no big deal there, and production of semiconductor smartphones remain closed. And they said that SmartCon opened up yesterday, that was a headline, but only 10% of their workforce maybe went back to work. Really shocking stuff. Morgan Stanley, stocks are up because the worse things get, the more likely we will get fiscal stimulus. No other words could be truer. You have. I saw this. I'm going to share this video I watched last night. I was up so late last night looking at some videos regarding to macroeconomics. Yeah, I'm that nerdy. And one that really caught my eye was there's a tug of war between the Federal Reserve and Treasury. And now the Treasury's ability to provide their own fiscal stimulus because the Federal Reserve actually parks funds at Treasury so that the banks don't have too much liquidity to lend out and cause inflation. The Federal Reserve doesn't want inflation. They say they do, but they don't. That's another story. I'll share the video once I find it because I went through so many videos last night. But you have the Treasury, you have the Federal Reserve loaning out money to banks. And what are they doing? They're buying up stocks. Not even banks, I'm sorry. Hedge funds, they're buying up stocks because they know there's a put below because the Federal Reserve is going to have the back of the market. Treasury is going to have the back of the market, especially in this election year. I've been saying this for months. Even back in October, when the markets were in free fall, I said, we're going higher. Why? It's an election year. It wasn't the charts. It's an election year, and we're going higher. Although I think we're going to get a pullback fairly soon. Let's go to the pre-market activity. That's my tirade of the morning. Let's go first to the stock market. I haven't looked yet. They were spiking the futures up last night. They pulled back some. But the S&P minis is still up this morning. Take note of RSI. This is a 4-hour chart. These will all be 4-hour charts. We put in a higher high yesterday. RSI failed to confirm. We put in a lower high. Moving on. The Russell 2000. The Russell is lagging here in a very, very big way. I mentioned over the weekend that one of our watch plays for the coming week is the TZA. The TZA puts you short, leveraged ETF, short 3 times of the Russell. We haven't opened up that position yet. And yesterday's bullish price action on the Russell leads me to believe that absent a bullish reversal day today, or bearish reversal day today, we probably won't be getting short today, but we'll be watching for an event, a technical event that's going to add us or have us add more to the short side of the trip queues, because at some point in time, the market's going to have to wake up. Because I just don't think the Federal Reserve in the short term can provide enough liquidity to offset the shock of the global supply chain impact. Just one man's hunch. I'll be watching for the technicals to validate whether or not I'm right. That's the only way to know whether or not I'm going to be right in the short term. So Russell looking weak. Let's go to the Russell 100, the NASDAQ 100. And this is what's leading the market up high right now, and it's what we are leaning into to the short side. I spoke about this on the Trend Spider webinar on Sunday evening. That webinar, I believe, is posted on their website if you want to go check it out. And you can see what a powerful move here. You can see that they were leaning it up into the third standard deviation Bollinger Band. The reaction, sideways consolidation. They are spiking it up higher this morning, up over 1/3 of a percentage point. We are what appears to be bull flagging out, setting the stage for a potential continuation move higher at the open. The question is not how we open up, folks. I don't care how we open up. I've seen all too many spikes up higher in the pre-market result in a reversal day, and it's on that reversal day that we get a glimmer of what the technicals are being offered by the market. And again, going back to, it doesn't matter where we open. What matters is where we close the day. How do we close out the day? Do we close with a reversal bar? Do we close down on volume, or do we close up? If we close up, we can't short it. We already have a leg in the short side. We don't want to keep adding more to a losing trade until such time as the market says that, you know what, okay, it looks as though the winds of change are beginning to shift, and now is the time to lean into the short side. Right now, what I'm looking at is another move higher today. Who am I to fight it? What else do we have here? Let's take a look at bond note prices. Lower highs, a consolidation. Let's see if we get a higher high here and a breakout. It's going to be very important for our gold trade to see a pullback in stocks and a move higher in bond prices to drive down yields. So the jury's out right now. I'm concerned about the tips because what we're seeing right now with the pullback in oil, we'll go to a chart of oil in a moment, the pullback in nat gas, you're seeing some deflationary forces move in to this market, and the driver of that deflation, and this is the U.S. market, the driver of that deflation, look no further than the U.S. dollar. Because remember, when you have a shock to the supply chain, as we're seeing right now, and you see a drop in energy supply or energy demand, and you see a stronger U.S. dollar, it's a cascade effect. So you have a supply chain shock, demand drops in commodities, commodities are priced in U.S. dollar, the U.S. dollar is moving up higher. That's a horrible impact. So at some point in time, remember that the U.S. is the highest producer of oil. Good morning, Trent. You're right. It is looking tempting. We did put it in a new weekly low yesterday, Trent. So I'm reluctant. We're looking for a breakout on oil. We're looking for oil as a potential trade. So good eye. I'm a little bit cautious right now, though. I think we may get another leg down here. We'll be watching the dollar. The correlation between oil and the dollar has changed dramatically. Historically, they trade inversely. Over a monthly time frame, you'll see that there was a convergence. Oil was able to trade for a while with the US dollar. That has changed. Now on a 30-day moving basis, the correlation is like spot 37%. They trade in tandem. So the correlation has gone back to historical norms. So as the dollar strengthens here, you should expect more weakness on the barrel of oil. And that's not going to bode well for the frackers. The USA is the highest price per barrel producer of oil. And if you see layoffs in the oil patch, not good for the president. So expect saber rattling. Expect something that's going to weaken the US dollar. It's getting way too strong. And therein lies the opportunity for gold. Gold is down at current. It is under pressure on a weekly basis as well. So it looks as though on this 4-hour chart, we're beginning to break out here a little bit. It's a breakout in time, not necessarily in price. We're just trading sideways. I mean, when I went to sleep last night, it was only a few hours ago, honestly. We haven't made much headway in terms of price movement. So we're holding support here. Let's see whether or not we get a continuation move higher on gold. I think we're going to need to see a break in the US dollar. Moving on further to commodities, copper. Dead cat bounce here. You know, copper is one of the pure plays on measuring global health. And this is very sick. And you can't blame the coronavirus. You know, for the recent past couple of weeks you can, in terms of weakness. But in terms of the monthly price action, you know, we didn't have coronavirus here, right? But going back to December of 18, we've been in the bear market ever since. Back to the 4-hour chart. So copper looks like to be a dead cat bounce here. I would not be a buyer. Oil. Oil is up this morning. You've got to be so careful here. We do have a positive RSI. Yeah, kind of broke down. RSI is putting in higher highs and higher lows, but it's slipping here a little bit. We have broken out on a 4-hour basis. We retested the breakout point twice. We need to see a higher high here. I wouldn't go buying a 4-hour breakout. Not when you have a chart like this. breaking down on a weekly basis. You don't want to rely upon a 4-hour chart. You need to begin to see new higher highs on a daily basis, and we don't have that yet. Looking at nat gas, of which we opened up a small position last week, and we're probably going to have to get stopped out of it. I'm hoping for a filling of the gap. If we continue to make new daily lows, we're just going to get out. Keep losses small. Where's my nat gas? Yeah, we're still rolling over here. We're down yet again today. I was looking for a rally back to fill this gap, and we still may get it, which opened up on the 9th. But we're not going to hope when we should fear. If we break the new daily lows, we're going to have to get out. If you're thinking about buying natural gas, folks, and you're already long, this is not the time to average down. Please do not do that. Please. What else do we have? Platinum. We were flirting with breakouts last week, but we're failing here. Palladium, which we called for a breakout on, has broken out yet again. Let's see what it's doing this morning. It's down now. If we break below the support level here, the rally in palladium is probably over, at least for the short term. We have a double top potential here. And if we break to new lower lows, I would argue that potentially you would want to set a stop right below this support level here. That would be a break of this higher low, and I would want to get out. I wouldn't short it, but RSI is very weak. Palladium's starting to weaken up here a little bit. Maybe going into consolidation range. I would not short it. What else do we have? I think we did everything. I'd like to take a look at, let's take a look at soybeans. I'm looking for opportunities out there where nobody else is looking. It's not in soybeans. Corn. Corn on a weekly basis is looking interesting. We broke out. We're consolidating. But now we're breaking back down again. Let's get rid of this. We're flirting with support. I would be interested in corn. I know that line's not level, but that's okay. All right, I just set up an alert. If corn breaks out, we'll take a look at corn. I believe Tetrium has a ETF on corn. All right, moving on. We're not seeing any bid in ag at all. Energy, sideways action at best on a 4-hour basis. Let's check out the euro. Euro is very, very weak. It is broken down to below pre-Brexit prices versus the US dollar. What a basket case. British pound holding a bid, but who cares? I'm trying to find glimmers of hope out there, folks, of where to find value, what might be breaking out in this environment other than stocks, because I simply can't chase this market. You can chase it if you're going to use a trailing stop loss order, but you don't know whether or not you wake up one morning and you have a black swan event right now. Yen, barely holding support. All right, let's move on to our watch stocks. All right, let's bring up Apple first. Now, keep in mind, let's first see what Apple's doing in the pre-market, if they have any trades going on yet. Apple's up. Higher lows on price. We did put it in a lower high, but it looks as though we've consolidated here. Looks as though they're going to pop it up higher this morning. But again, folks, the question is not how we open, it's how we close, right? We may be opening up strong here, but do we close? And do we close lower? And if we close lower, what does that mean? What do we do next? And we're looking for that event. We're looking for that reversal day. And it may not be today. It may not be this week. We've got to keep very, very open-minded about adding to the short side here because we are fighting the market. Trent, short coffee might be good with China and Starbucks. They're closing. That's a good one. Let's check out coffee. I don't get it. Thinkorswim doesn't get it. Do you have another symbol for coffee, Trent? Do you know by chance? If you do, we'll go back to it. Good idea, though. All right, so Apple, weekly basis. With Apple, on a weekly basis, we have RSI at 82.70. It was above 90. It's traded sideways, and this is what I always warn about. You just can't short necessarily off of RSI because it can trade sideways. So you want to see a break. And we did break, but we've rallied back. We still have RSI above 80, which is very, very elevated for a mega cap. Daily chart. Now, what I want to point out here is that Apple, RSI, is making lower highs. Despite the fact that share prices have been inching higher since January. Good close in the raindrops. So we had buying into the close yesterday. Now keep in mind, this is the chart. Daily chart, weekly chart, monthly chart. with their major component producer, Foxconn, not producing any components. The share price hasn't nudged a bit. Let's say the least case scenario is fact that only 10% of their production is being impacted, yet their share price is pressing higher. You can't make this stuff up. So Apple, we're looking for a reversal day on. This is the major component of the triple Qs. Moving on to Microsoft. Microsoft, which has, to a lesser extent, an exposure, I believe, I could be corrected on this, but I believe to China than what does Amazon. And we are very extended here, but we can move up higher. This is a monthly chart, going to a weekly chart. Very extended, but again, we can go higher here. Daily chart. This is a powerful chart. We'll lean right into that third standard deviation Bollinger Band, traded sideways, continuation breakout higher. We have RSI on a daily basis at 81.60. Again, another mega cap with RSI readings above 80. This time on a daily basis, Apple's on a weekly basis. And it appears as though they're going to spike it higher. Four-hour chart, we have RSI at 82.14. They could push it higher, but folks, we're going to get a reversal day. It's going to happen. Let's take a look at Amazon. Amazon is another name that's heavily weighted to China, and nobody's paying attention to this. RSI is not that overbought, but when you take a look at the share price on a weekly basis, we're flirting with that third standard deviation Bollinger Band. We're probably going to tap it again. Monthly view, a beautiful breakout here. I mean, gorgeous. Were it not for the coronavirus and the impact on the supply chain, thanks, Trent. I'll take a look at it. Is that a future or ICE future? I'll check it out. Okay. Thank you. Were it not for the coronavirus, I'd say that this is a buy all day long. We had a breakout. We're going to have resistance up here at 2192. Let's set up an alert here. So we'll be looking for a reversal day off of hitting this upper band of resistance. Again, Amazon is a major component of the triple Qs. So our alert is set. Daily chart looking outstanding here. But again, folks, think about the products that Amazon sells. How much, what percentage of that is made in China? How much of those goods are made overseas? You have this virus spreading all throughout Asia. How much of an impact is this going to have on the supply chain of Amazon? So to think that this is not somehow, some way going to impact inventory, I think is wrong. And that's the play here. That's the trade. And let them continue to press it up higher. The higher it goes, and if I'm right, we get a reversal day, our risk reward becomes far more favorable because the pricing of the shares is becoming more and more inefficient, we'll call it, unsustainable. You have RSI on a daily basis that is at 79.77. Microsoft RSI overbought daily basis. Amazon overbought weekly basis. These are the major components of the triple Qs. So while I agree, beautiful chart, normal circumstances, there is no way I would be looking to short this name right now. No way. But the fact of the matter is that people are not paying attention to the supply chain disruption. Why? I have no idea. The only thing I can conclude is that it's a tug of war between the Federal Reserve pumping in liquidity and the denial of a supply chain disruption. Right now, the market's saying the Fed is stronger than a supply chain disruption. I want to leave off with Square. Trent, we'll go to your coffee trade. We'll leave off with that. I spoke about Square over the weekend. This was a request on Sunday Night Futures Live. And we broke out this week. So just an FYI here. Daily breakout on Square. So we may be looking to enter this trade at some point in time. I'm reluctant to get long of equities right now, but this is one trade that we're considering as a potential long. So nice setup here. All right, going back to, let's see if we can get coffee up here. Here's Apple moving up again. Nope, that didn't work. What else you got? C. Nope. I don't know what the heck this is. Let's get rid of the forward slash. That's going to be city. That's not going to be right. You know what we'll do? There we go. Continuous contract. Whew. Devastation. I think we're going lower here. Because this setup is a dead cat bounce and a classic bear flag formation. You have some institutions out there betting that we've seen a bottom as noted by these volume bars. I don't think they're right. I think we're going to break. We are hanging on by a very, very thin thread. We have a new month-over-month low. We're barely hanging on to a buck. That's critical support. It was support here in October, closing support. Resistance back here in March. Support back here in November 13. Support back here in 2009, etc., etc. I don't want to waste your time here. But it's critical support. If we make a new monthly low, it's a short all day long. Hey, Sam. Hey, Pat. Gold consolidating, Pat. Hasn't done much overnight. And NG is down yet again. Let's check back in with gold. We may need to stop out of NG this morning. Gold weakened up a little bit more here. We need to hold the support level. Yeah, SPX futures are up high. Yep. They pull back a little bit, but they're very, very high. We're looking for an event. You know, a lot of you folks just joined in. If you can hit that like button, I really appreciate it. You can check on the replay the analysis of why we, despite the fact that futures are higher, I could just come on here and say, you know, buy the market, yada yada yada. The real story is a supply chain disruption here that's being ignored. The other real story, I talk a lot about the president's election hopes. This powerful US dollar is not helping oil prices. He needs a stronger price per barrel of oil. And the dollar is strong. It's probably going to get stronger. They're going to need to step in. Because let's pretend that the Chinese issue is not an issue. The surging US dollar, which is deemed to be at current a safe haven because it's just such a deep market, the surging US dollar is causing deflation in the commodity sector, and it's also costing the price of our goods overseas to become far more expensive, thus putting pressure on our products manufactured here. We can't afford that. So at some point in time, ideally before the dollar breaks out, there's going to be some sort of intervention in the US dollar, some jawboning down of the US dollar, because it's poised for a major, major breakout here. And this breakout here may be nothing absent some sort of an intervention. And just to point out what that looks like, I was looking at this last night. Here you have it. You know, technically, we broke down on the dollar here in December. It was a ruthless month to the downside. We broke trend. And now one might argue that we're rallying back in an effort to try to recapture support levels. We haven't broken out yet. But it appears as though all the concerns about coronavirus and whatnot are driving investors or money into bonds, driving yields lower, and into the US dollar. If we get a breakout here, you're going to see all sorts of technical buying, shorts covering, whatnot. And the next price target would be 100 on the Dixie. So potential lower high here. But if we break out above this resistance level, we could be going a lot higher on the US dollar. So with that, folks, I'm going to say everybody have a great trading day, profitable trading day, and watch out for an event, a reversal day. That's what we're going to be looking for, to lean into the short side of the Trip Qs and potentially the Russell small caps. That's what we're looking for. And everybody have a profitable trading day again, and be well.